Welcome back, it's LSP. It's currently the 5th of May 2020. I just want to go over some ideas, on why traders get themselves into a lot of trouble, and end up in situations where they just get stopped out. They take losses unnecessarily, and it promotes a gambler's mentality. It promotes an idea, that making money in the markets is very, very easy, and it simply isn't. And it all hinges on higher time frame analysis. You'll hear the terms higher time frame analysis used quite a lot in the industry, but there's not many beginning traders or new traders or even people who've been around for a little while, who understand the mechanics of what higher time frame analysis is really all about. It's not just about looking at the higher time frames and saying, okay, I think price is going here. It's about understanding the time it takes for these things to form, and it brings with it the added benefit of keeping you out of the marketplace until price reaches these levels that we want to see, or comes close to these levels. And a really good way to show this is if we look at the hourly chart here of the pound. It's been going sideways since we opened this week. It hasn't done anything. It's stuck in a very tight range. It came up, it took Monday's high out. It wouldn't surprise me if it came down and took Monday's low out and then came back into the range. Nothing's happening, basically. Nothing's happening. So if we go over to the higher time frame, say weekly, okay, and we say to ourselves, all right, look, we're stuck within this range. Yeah, it's a bit messy. You can find lots of fancy ways to explain what you're seeing, and try to justify picking something off on pound USD. But the reality is there's nothing there on the weekly. There's nothing there on the daily. We're effectively going sideways. So if we take a step back and say, right, we're looking at the weekly chart, and what we really want to see, before we'd even consider doing anything else, right, we take everything at face value and we say, right, what are we seeing so far? We go up to the monthly, we can see we've had this really nice drive. I've already explained it was, dropped all the way down into the night, that level back in 1985. Huge area of demand, nice response away from that. Okay, so we've had some movement. Yeah, we've had some movement, but that's all finished. And right now we're going sideways. So what do I want to see? What do I want to see? As I've said, I believe price is coming up here. All right, 127.25. So do I take a punt and say, right, I think based on where price is right now, it's going to run another 260 pips or so. So I'm just going to get in now, and I'm going to have a very, very wide step, very wide stop, or just an open position with no stop, and I'm just going to wait for price to go into the 127.25 level. Yeah, you can do it that way. Stupid, but you can do it that way. All right, or you drop down to maybe the daily, and you say to yourself, right, there's a couple of scenarios I'd like to see. I'd like to see maybe price drop lower, take out some liquidity, reverse, start to grind higher, give me an indication it's going to go, for these two highs up here. And then you can pick off, a small, say, 20, 30 pip trade, 40, 50 pip trade, while you're in a much stronger position. The confidence level is there. The analysis is there. You're seeing what you want to see. You're getting confirmation. Everything makes sense. Or price goes through this level, leaves open liquidity to appear in terms of the 127.25 before rebalancing, dips back in a little bit, gives you another indication that it wants to start grinding higher, and then you take that last little portion into the 127.25 level. Yeah, that's just a couple of scenarios. The point is, those scenarios are both dependent on you being patient and waiting for something to actually set up on the daily, on the weekly, and if you do that with multiple pairs, let's say you generally monitor, say, 5 pairs, for example, or 5 asset classes, like, it doesn't really matter, five something, yeah, and you look at them at the end of every day, yeah, that will give you a much better, stronger, more logical way to approach the marketplace, and it eliminates a lot of the issues that people have when they drop down to the lower time frames and frantically trying to get in and out of trades, suffer losses, get frustrated, revenge trade. You're effectively setting yourself up to fail, basically. So high time frame wins every time. Spend most of your time on the daily and the weekly, and it will cultivate patience. If you force yourself to stay on these high time frames, it will absolutely cultivate patience, and it will give you what you need to see, in terms of your analysis, in terms of your learning, and in terms of your entries on the lower time frames, and you will trust your high time frame analysis. So when you drop down to the low time frames, you're not looking at all of that noise. You're just looking at the trade and the level where price should be going for on the higher time frame. All right. So with all of that said, guys, I hope everybody's well. Hope everyone's having an awesome time on holiday. which is effectively what's going on in the world. We're all on holiday, and we'll leave it at that. Hope everybody's safe, hope everybody's well, and I will catch up with you guys in the next update. Take care.